Senate Majority Leader Harry Reid saying the Senate could hold its final vote on Ben Bernanke's confirmation early this afternoon. Steve Leisman is still in Washington with the latest tally. The first vote would end the filibuster early this afternoon. I'm reading your thing, Stevie. I'm sorry. You take it from here. I just want to know, Tom Honig, who dissented yesterday, is my new favorite Fed hero. Please report.
You were doing so well reading my script, Larry, as you always do.
It just popped up, man. This teleprompter's in revolt this morning. Let me
give you a little of the quick thing how it works. The first vote ends the filibuster. That's supposed to happen early this afternoon. And then perhaps we have a full vote on Fed Chairman Ben Bernanke and his second term. But just about half an hour ago, the Vermont Senator Bernie Sanders took to the floor and expressed his view on the Fed chairman.
The American people want change at the Fed, and I believe the American people want a new chairman or chairwoman at the Fed. Now is the time to say to the American people, we hear you. We are going to bring about change.
Now, Sanders is one of the most outspoken critics, but I don't think he's going to carry the day, not according to the CNBC tally. What we have here is 43 votes in favor and 20 against. If you project that forward based on how the other folks voted, it still looks like a 70-30 split. And the way when you break it down by party, what you find is overwhelming Democratic support. And the Republicans, I talked to some Republicans that are a little disappointed in their colleagues, thinking they can only come up with so far 11 or running less than half right there. So debate begins at noon, guys, followed by the vote to end the filibuster. Senator Reid's office telling us that an actual vote maybe later this afternoon. So we'd be here all day knowing how much support that Ben Bernanke begins his second term with. And on Honig, Larry, I just tell you that he might be leading the way. I would tell you very simply that the debate at the Fed is going to be over this pre-commitment language, this idea of exceptionally low for an extended period. That will be the first to go before anything else happens. Larry?
Steve Leisman, can I write in Tom Honig? Is there some way an ordinary taxpayer like me, a humble, quiet guy, can write in for Tom Honig as Fed chairman?
Larry, can I just tell you, you have an hour at 11 o'clock every day. You have a show at 7 p.m. in the evening, if you've forgotten, and you may get on the heights and scream and yell Tom Honig as much as you like. I don't know that it'll do you any good, but it's an interesting idea.
Never stopped me before. Thank you, Steve Leisman, very much.
Sure.
Now, let's talk about let's talk about Chairman Bernanke, and let's talk about President Obama's State of the Union, and let's talk about the stock market reaction to it. We have Gene Sterling, fellow at the Urban Institute, Bruce Kassman, chief U.S. economist, J.P. Morgan. Our market guru is Eric Ogard from Russell Investment. Hello, everybody. Eric, can I start with you? Dow's off 100 points. I know there's no exact correlation. Not even I believe there's an exact correlation between Washington and Wall Street. But we did have the announcement last night. Yes, the bank tax is still in there. Yes, tax rates are going up next year. But the new wrinkle that surprised me was a tax on foreign corporate earnings. And I want to know, Eric, if you think that's any meaningful deterrent to stocks this morning, which are down 117 points as we meet.
Well, I think on that one in particular, it's just another market-unfriendly policy. So it could be adding to this. But for me, when I look at the market action in reaction to some of these economic discussions, the point is that the markets are a little concerned right now, and I think we have more fear and psychology driving things than actual earnings. And if you look at the earnings picture, it's very, very favorable. And so my view is earnings are going to be up this year over last year, and at the end of the day, earnings drive stock markets, and they will finish higher, I believe.
Bruce, do you agree with that? Because, I mean, there's little doubt right now that the market's in a funk. Look at that. We went down from down 97 to now we're down 116. I mean, is politics what's causing this?
I think uncertainty, certainly on the political side. There has been, I think, more uncertainty on the economic data front as well. But I'd echo the point that earnings are going to be very strong this year, but very strong earnings, margins up to close to 40-year highs against the backdrop of a 9.5%, 10% unemployment rate. That sets the political, I think, risk here that we end up using the strong performance of corporates to help pay for social needs that we have.
Gene Sterling, you're an experienced tax analyst, and I want to ask you about these little teensy-tiny temporary tax credits for small businesses. Is that stuff really going to work? I mean, I'm all for a zero capital gains tax, Gene, but I'd like to universalize that across the board for large and small businesses on a permanent basis. What's your take?
Well, it's very hard to design these small tax cuts for one group or the other. So you've got to define what a small business is. Is that somebody who makes $10 million and somebody who makes $20,000 working for a large company doesn't qualify? You've got this issue of sometimes trying to define what's incremental or not incremental, which they're trying to do with respect to employees that might work for small business. A lot of the stuff is extremely hard to define if you don't do it on a more universal basis.
So you don't think it's really that efficient? It's not going to have a big impact. Is that what you're saying?
It's not going to be that large either. In the grand scheme of things, it's pretty small potatoes.
Eric, you heard Steve Leisman talking about Ben Bernanke and where the vote tally stands right now. It seems like he's definitely going to get back in, but isn't he in a weakened state at this point, and what impact does that have on the markets, on stocks, on the economy?
You know, I don't think it does, and I think Ben Bernanke is a fine chairman. I think he's done a wonderful job, and I think he doesn't get the credit he deserves for really orchestrating a wonderful policy initiative to save the economy and the markets. And so he's replaced lost liquidity with new liquidity. He's watching liquidity carefully, and the Fed is doing exactly what they should be doing to keep the economy strong.
We want to go to Steve Leisman really quickly because he has some breaking news on the Bernanke vote as we're actually talking about that. Steve, what do you have?
Yeah, you know how quickly and how slowly things move in Washington. We're told very definitively here, the cloture vote, which ends the filibuster, is at 3:20 this afternoon. If they get those 60 votes, they will proceed immediately to a vote for confirmation, so there will not be any drawn-out debate. The idea is if he gets those 60 votes, gets past filibuster, it will be done today. We don't have to come back and talk about this tomorrow. Melissa?
Okay.
Larry?
Eric, I want to go back to the point that you were making before we said that because, I think a lot of people agree with you that he's done some good things so far, but the question is, will he do the right thing when it's time to take the punch bowl away, is the phrase that we're overusing at this point. I mean, he was the one who was on duty when the bubble was inflated in the first place. That's what we're worried about, not that he hasn't done a great job so far in the midst of this crisis.
Well, you know, I think the conversation is worth having, but at the end of the day, if you look at where the Fed funds rate is set, it tends to follow the 90-day bill with a great deal of precision. So all the Fed is doing really is introducing maybe a smoothing over the 90-day short-term money rate in the markets. And you have to look at what they're doing besides money rates or Fed funds to help the economy out. And so it's a more nuanced discussion when it comes to Fed policy. And I just think he is the right guy for the job. And I don't think the right position is to say, you know, the excess money in the system, which was largely driven by the shadow banking elements of the economy, are lay at the feet of the Fed. You know, it's a much broader, more complex problem than that.
All right. I don't share Eric's pro-Bernanke view, but I do want to move on to Bruce Katzman. Bruce, let me ask you a stock market and economic question. We know, I guess, that at some point the Fed is going to withdraw a lot of the stimulus. The balance sheet is going to have to shrink down. The rates are going to go up, however they do it. And we also know that we're faced with a bunch of tax hikes next year. And I want to ask you regarding this, stimulus that was put in is going to come out. And I think there's some nervousness, you know, almost a year ahead in the stock market today. And I want to get your market take on this, and I want to get your economic take. How dependent are we on these stimuli from, you know, lots of government spending to be replaced by higher taxes, and the Fed pouring the money in, $1.5 trillion, and taking it out? What does that mean?
Well, I think we got a very big spark from policy, and there's no doubt the policy stimulus is going to start to fade on the fiscal side. I would argue, though, that the Fed keeping rates where it is for now actually is a building support. And the key question really is whether the private sector can get enough lift here over the next 6 to 12 months. I think that's likely to happen. I think the earnings story is a big part of it. I think there's an uncertainty if corporates are sitting here worried about where taxes are going and where policy is going. But I think we have put in place the preconditions for the private sector to take away take up the slack that the fiscal stimulus is going to be taking away over the coming year and a half.
Gene Sterling, just one last one for you. Instead of all these tax credits, temporary tax credits for this, for that, temporary tax credits if I cut my toenails on the left side of my foot instead of the right side of my foot, Gene, wouldn't we be better to get rid of all that stuff and just lower tax rates across the board, just lower them across the board?
Well, I don't think there's any doubt that you want a broader base of the tax system as you can and keep the rates as low as possible. But let's be honest about it. The imbalance between what we've promised the public in terms of spending and the revenues is so great that over the long haul, you're going to have to see some revenue increases and some substantial cuts in the promises, the growth in health and retirement and other benefits. And bringing those to an order, I think in the long run, is what's going to really influence the markets, because we just cannot run these types of deficits into the future. And those huge deficits are an even bigger problem, I think, than the tax rates themselves.
Okay, we got to leave it there. Thanks to all of you for joining us.